I'd love to start off with the question of just doing a quick intro of yourself. You both need no introduction, but maybe a quick intro, what you're most excited about right now, and what's your favorite capital allocation mechanism. Joe, we'll go to you first.
Hi, Joe Lubin. I'm most excited about the decentralized future. May it come really, really quickly. I think we're in a pretty massive acceleration phase, fingers crossed. My favorite allocation mechanism is to bestow tokens on worthy projects, and going to be doing a lot of that very soon.
We appreciate that. Juan, you're up.
I'm also pretty excited about the acceleration happening. One of the coolest things that I've seen is just how many scientific problems that used to take 5 to 10 years are now getting solved in months. This has not yet really hit our lives yet because scientific problems are very upstream of technology getting built and so on. But you should just expect that tons of parts of our life are just going to start getting solved faster. Also very risky. That's a whole other conversation. On-chain capital mechanisms that I'm very excited about, probably the most important one that I think is very undervalued is a thing we call impact evaluators or meridians, which is a block reward is one of these things where you have an automated structure that collects contributions and then rewards those contributions proportionally according to some value metric. And if you have some like treasury on-chain that you can see and you can calculate the distribution over time, that is a phenomenally powerful mechanism to distribute resources, and it creates global coordination frameworks unlike anything before. So that, a single block reward structure for Bitcoin launched the entire crypto industry and everything that came downstream of that as an example of their power. Deepened networks use these a lot. And I think they're very untapped in terms of, I think people should experiment with that structure much more.
Thanks, Joe. Thanks, Juan. Ree, same question to you. Intro of yourself, and what are you excited about, and what's your favorite on-chain capital allocation mechanism?
Thanks for calling me Ree, too. I'm really excited about that.
I know you prefer Ree, right?
I am going to introduce myself because as one of the only people on the panel that some of you might actually be like, who is this person and why is she up here? I am Rena O'Brien, Delta Juliet. I am executive director at Gitcoin and co-founder of Allo.Capital with Kevin Owocki and Juan Benet. And of course, just in the grace of these gods, go forth I. In terms of capital allocation and what we're doing here at Allo.Capital, I actually have to kind of follow on to Juan Benet and what you've been saying in terms of impact evaluation. I think that there's just so much work to be done in the mechanism space where we can create tools to make better, more informed decisions with less overhead, something that we've talked about a bit. There's a ton of admin in terms of allocating capital, and we know that in Web 2, Web 2.5, Web 3. And I think that there are a lot of really interesting things that are coming out. I'm hoping to have some of those published on research.allo.capital soon. You guys can see some of the things that we're playing around with. And one of those mechanisms that I'm really excited about is DDA, so dedicated domain allocation. This feels like a really compelling move in terms of the next steps of evolution of capital allocation. And I think that we've got some really smart people working on it. And hopefully we'll be able to share that and share more with everyone here soon.
Great, thanks. And then just to round out the conversation, I'll just say that one of the things I'm really excited about right now is DAOs 2.0. So how would you design a DAO in 2025 with HATS protocol and AI and commitment pooling and all of the things that we didn't have in 2021 when we launched Gitcoin DAO? So, in what ways could we apply those to Allo, or could Allo actually build those? And I think that those questions are existential, because how do we allocate Allo to the people who are building Allo? Say that 3 times fast. It's tough. And then my favorite capital allocation mechanism is quadratic funding, because that's what gave me my start in the Web3 space. And I remember when we built quadratic funding into Gitcoin grants, it was like being on a rocket ship for 2 straight years. And I've got the scars to show it, but also had some great adventures over that time. So quadratic funding is one of many mechanisms that we're using right now, but it got me my start, and that's why I'm most thankful for quadratic funding right now. So I guess the next question that I want to ask the panel And Juan, maybe we'll start with you since we started with Joe on the last one, is if I was a builder out there in the Allo ecosystem, what should I be building? Where should I be focusing my energies? And I guess the way I want to frame this is relative to the answer that you gave in the first question. Your vision is accelerating R&D and accelerating science. What mechanisms should people be focused on in order to help fulfill that vision? Juan, let's go to you first and then to Joe.
Yeah, so maybe I'll give like three types of things that you could work on and see which ones appeal to you the most. So first and foremost, we need a lot of experimentation with new kinds of mechanisms applied to some problem in an end-to-end way where you actually tune the mechanism to work really well to solve some problem, and you report on that and you show how that works to the broader community to see how that mechanism can be applied elsewhere. So a lot more experimentation with new fancy types of things. The second thing that I think is super crucial that a lot of people in the Allo community need to work on is figuring out abstractions between these and what are the building blocks that can then create composable primitives that we can then plug together into a larger infrastructure that can make the like Legos of capital allocation actually work. Right? So today, most of the deployments of all of these things are separate, siloed, different components, and we need to go through a step of like refactoring and gleaning out what are the abstractions that can yield the composability that we need. DeFi, one of the biggest successes in DeFi is the massive composability between all the contracts and so on. And so we need that kind of structure, but for this kind of capital allocation. And then the third category that I'll describe that kind of connects with the R&D piece, one of the biggest problems is making sure that you have some investable asset that can create a sustainable regenerative loop. Most of the work that I've seen in the PGF community, for example, is so far away from making any kind of revenue structure that it becomes very difficult to self-sustain. And most of the teams are just so starved for resources that they can't make fast progress. When you compare that to, say, like the 50th blockchain infrastructure app or the 50th like random DeFi protocol, those things can get capitalized very well because they have a very straightforward revenue-producing structure. So I would say come up with new types of ways where you can have good investable structures that can create a larger capital flow that can reward the teams building all these things successfully.
Thanks, Juan.
Yeah, so I think I'm going to riff on two things that Juan just said. One is composability. For a long time, there have been so many problems with raising capital for projects for the last few decades. It used to take a ton of capital and big teams. It got smaller and smaller. We've been in a phase where you don't actually need to raise money. You can just create your own magic internet money and attract your team that way. I think I was listening to the All In podcast where they were speculating on when the first $1 trillion startup will be formed with just one human in it. And so teams are going to be massively augmented via AI technology. And so one of the biggest problems is that if you're doing a profound project, it might be 5 years, 7 years, 10 years before you see significant traction or success. At least 2 or 3 years. It's a fair amount of dedication for a lot of people. If something happens and you hit a dead end or other lack of success in your project, you've learned a lot, no doubt. You've made a great set of friends and a network, but your equity might go to zero, and effectively it can feel like a pretty profound failure. And so what I would like to see is, as we build bigger and bigger systems with smaller and smaller teams, I would like to see a sort of gamification of how teams of teams can interoperate with one another. If I'm moving in one direction, building some project, and I get stuck, there's a roadblock there, and if only I could raise a little bit more money and do this project and then pick this project up 2 years later when this roadblock is cleared, that'd be great. So some sort of overarching context where you can jump in between teams. This team can pause their thing and come over here and swarm on this project because they think it'll be beneficial to theirs. That's one. And hopefully I'll remember the second piece. The second piece was kind of related to that. It's mechanism design. One was describing building sort of complex ecosystems where you do have composability, and you may be building, let's say, a zero-knowledge proof solver network system, and there may be some zero-knowledge proof technology that you're pioneering, but a lot of the real value of what you're building is in the ability to attract talent, to attract capital, to have recirculating flows of capital, and the field of mechanism design, which is sort of partly economics and some other stuff, defines incentives and punishments, sources for value or tokens, sinks for value or tokens, and so we need to get really good at building the meta aspects of projects.
Thanks, y'all. Rena, next question is yours.
What was the question? What are we talking about again? Why are we here? I've got a couple of things. I'm actually going to bounce some of this back to you, Kevin, because there's two distinct things that we're talking about that we're doing at Allo.Capital, and I think it might be worth double-clicking into them. Based on Juan's responses, a lot of what we're doing on Allo.os seems to fit in terms of that, and I think it'd be useful for you to answer your own question in what people and builders in Allo can do next, and why Allo.os is such a flagship product. And then the second part of that is talking through a little bit more of your path to 10x, and some of that category creation and the through line that you talked about this morning a little bit more concisely. So back to you, Kevin.
Yeah, thanks. So, I mean, I think that what we're trying to do with Allo is that we're trying to summon the capital allocation layer of the tokenized internet. It's basically just a bet that there's going to be 10x more tokenized assets in the next 10 years. We're going to tokenize stocks and currencies and commodities and also things that we never thought could be financialized before, like memes. Are going to be tokenized, and that these communities are going to want to allocate capital to what matters to them. And I think that, like, one of my, how do I say this? Whenever anyone says to me at a conference, "Congratulations on Gitcoin," seems like it's going great, I always have this little bit of imposter syndrome in which I think to myself, yeah, like, if I could pay myself in vibes, like, it'd be going really well. And to be clear, like, Gitcoin is starting to generate revenue. It's just taken us like 7 years to get there. One of the things that I want to do better with Allo is actually generate revenue for the network of builders that we have, and for Allo itself. And so I think the path to 10x is finding the best builders, partnering with them, finding a 3-3 where we give them distribution funding and technology, and in exchange we get a portion of their upside. If they can get a 3 or 5% take rate for the funding that they move through their platform, then we can participate in that upside, and we can kind of create like a epicenter for people who are building capital allocation infrastructure, and then from there we've got a profitable venture, and that can be a flywheel that continues ad infinitum. So I mean, I think that that's sort of like the answer to, like, what should we build is we should build something that actually generates revenue at scale this time, and I think that we're figuring out what that looks like. I have a question for Juan and Joe, but it looks like you have a take there.
I was actually just going to go into the tactical side of it very quickly. Raise your hand if you've heard of the DAO Design Contest. Nice. Raise your hand if you've submitted to the DAO Design Contest. Nice. And so my tactical answer, which is a yes and to everything that everyone said, is go find the things, go find the mechanisms, find the value for it, find the partners for it, and let's at the same time, figure out how we get those contributors paid for doing that research and building those things and getting that revenue and creating those flywheels into the treasury and back out again to get those builders, much like all three of these gentlemen have said. So go fucking do it.
Yeah,
Thanks,
I just want to share a perspective on what I think you may have said, something like 10x the value of tokens compared to what already exists right now over some period of time. So I think we're just in this insane moment of accelerating magic, essentially. And DeSci is accelerating magic. And I assume that over the next small number of years, much more purchasing power in the form of magic internet tokens, whether they're equity tokens or utility tokens or loyalty tokens, whatever, will be created than exists in the form of nation-state tokens. And a lot of us in our ecosystem will be creating those tokens and will be using them in our lives. But a lot of those tokens may end up being created and owned by machine intelligences. So this is the world that we're moving into.
Yeah, I think it's profound, and as you're right, it's accelerating. And maybe 10x isn't aggressive enough. Maybe it'll be 100x.
At least 1,000.
Okay.
Let's go.
Yeah, I mean, like the crypto industry is in the 1.1 to 3 trillion scale, and all the money in the world accounted for is like in the many hundreds of quadrillions, gonna hit quintillions in like 5 or 10 years or so. So as crypto keeps eating asset classes, it'll keep going orders of magnitude, eating into that hundreds of quadrillions to quintillions. So 1,000x growth in like 10 years or 15 years is like totally doable.
Amazing. Number go up. I remember those days. I remember when number used to go up. Rip.
But by the way, it may not be called crypto the same way, and there's going to be a really important fight over the next 2 to 3 years where you're starting to see today a lot of financial institutions now leaning into crypto. Like I've just seen bank CEOs talking about how they're going to issue stable coins and be part of DeFi and so on. I'm like, hold on, like this was like tools for a different model of how we want to do capital allocation, not just for like the existing incumbents to just continue intermediating everybody just with our tech. And so it's going to be really crucial over the next 3 to 5 years that we really force these platform shifts into like this kind of decentralized technology. And it's going to be more and more and more important as we see success with traditional finance moving over, that we like follow the rules of the decentralized landscape.
I look at all of that as just surface area for builders. Once we have tokens in ERC20 and 721 and other standards, what are the crowdfunding platforms that we can build? What are the ways that we can allocate capital to the constituencies here? And if there's a 1,000x growing market here, I think we can create multiple unicorns in this audience and in this network. And I think that we want to accelerate the journey of the builders along the way. So I have a question for Joe and Juan, but the timekeeper in me just wants to note that we're at 2:05 right now. In about 10 or 15 minutes, we're going to move into the fishbowl portion of the panel, in which we'll invite other people up on stage to discuss. But the question I have for Joe and Juan is that Allo is doing something pretty radical right now, and that's that we're designing the Allo DAO in public. So traditionally, DAO design has been the venture of a few really smart, well-connected people, sometimes with Kiwi accents, and we're inverting that. We're inviting the Allo community to submit DAO design proposals of what they think the Allo DAO should look like. And we were expecting 2 to 5 proposals. We received 30, which was cool. And they've got diverse capital allocation mechanisms that we could install at the root of the DAO. Things like cookie jars or futurarchy or dedicated domain allocation or retro funding. If you're a mechanism nerd like me, you know what these things are. But we've got some of those DAO designers in the audience right here in the Allo summoning. And I also think the radical thing that we're doing is that we're recording these, and this will be given out as a podcast, the Allo podcast, which will allow anyone out there to participate. And I think that we're doing something radical. We're inverting the process of DAO design and tokenization of Allo itself to be public, and hopefully that provides a more legitimate basis for the launch of Allo. And allocating Allo is going to be one of the most profound things that we do, and I think we have to get it right at the start. And so by inviting everyone to do that, I think that creates a lot of legitimacy. So that's a meandering launchpad for my question to you both, which is, what advice do you have for people who are designing the Allo DAO? What should we focus on? What traps should we avoid? What are your favorite trends in 2025 launches that you think that Allo could take advantage of? Who wants to go first?
A lot of thoughts here. Probably the most important thing that I would say is that we need mechanisms that can be upgraded over time. I've seen a lot of projects grind to a halt because they didn't build in enough flexibility to improve themselves over time, and then really struggle, and then have to then fork and turn into something else. And so having upgradability at the very bottom layer to be able to try experiments quickly, see if they work, and then kind of refactor and evolve over time is going to be one of the most important things. I think second, I'm going to plug the subnet structure that BitTensor pioneered that is now going to be used in BitRobot and a number of other networks, where you can create different groups that kind of agree or disagree with each other about what to do to different degrees, but you enable them to actually try it out. And if they're successful, then they get rewarded with a mission over time. That structure, I think, is extremely powerful because many networks, once they reach a certain size, if you don't have flexible ways of empowering groups to go try out different things, they kind of grind to a halt because of infighting in decision making. They just get into these very bad coordination traps of having to vote on everything all the time. And instead, if you have like this two-tier structure, you can enable groups to try out lots of different things. And then if they're successful, then retroactively that can get rewarded. And then probably the third thing that I would push for is go towards creating value and then capturing or harnessing part of that value early. The crypto community got the ability to kind of create magical internet money and leverage that as a build-out phase for many years, way ahead of kind of like revenue flows. But that time frame has been shrinking. And so, I don't know, you probably also the AI coin like mini bubble that happened where like very quickly within 6 months, all of these AI chain things got like super valuable and then super unvaluable very quickly. And that's an example of how quickly the cycles are becoming. And so the market is not going to have a ton of patience for things that are too far away from some kind of revenue structure. And so I would strongly encourage DAO designs that encourage finding how to create really valuable stuff for communities and enable and turning on revenue taps from those to make the whole thing much more successful from day one. Like ideally, what I tend to recommend to projects now is be demand driven first and like actually be revenue positive from day one if you can, and that can be a much more stable foundation long term.
Thanks, Juan. Joe, you're up.
Yeah, so as you're all aware, it's all about community. It's all about building engagement. That is mechanism design at the heart of it. Best thing for me to do is probably to talk about a few things that we're working on. Our company Consensus needs more permeability, more porosity, so that it can interact more fluidly with the context around it. We are externalizing some of our projects and inviting other projects into our context. Our context working name, so our company's called Consensus. The context will be the Consensus Network State, unless we find a better name for that. We have a project, a layer 2 ZK-EVM rollup project called Linea. So Linea will be the digital real estate on which our Consensus network state lives, and we are tokenizing it, externalizing it. It will be as rigorously decentralized as we can make it, and make it genuinely independent. But we'll still lean into it. Our company will still lean heavily into it, and we're looking to use the tokens that we create through very structured programs to incentivize builders, liquidity providers, users to be part of the community. And one of the first cohorts, the first initiatives will be to invite projects to get funded to build out an agreements framework. So we're working with a project called Sobel, which we're very close to. They are building an agreements framework, on-chain agreements, milestones, automated payments. So you probably know the drill. And the first cohort will be building layers onto the agreements framework. So we're going to eat our own dog food, and then we're going to generate more dog food to keep eating. So we'll have everybody sign up using the agreements framework, and then build things like negotiation tools, structured decision-making tools, OKR frameworks, things like that we can layer on and grow it from there.
Thanks, Joe. Thanks, Juan. So let's do one last question for Joe and Juan, and then we'll let them go. We'll release them, and we'll start the fishbowl portion of the conversation. Last question is a simple one, but I think it's got a wide surface area. Is there anything I didn't ask that you want to say? And maybe, Joe, we'll start with you on this one.
Simple answer would be no, but if what Juan says jogs something more interesting,
okay.
then I'll pipe up.
Cool. Juan, anything come to mind?
I think probably just I want to reinforce the focus on composability and primitive building. And I think if I can encourage folks who are making proposals either to the DAO proposals or for building mechanisms or whatever, as you do these things, figure out what abstractions seem to be common across multiple mechanisms, and what are the things that we need to bake in at the core of the protocol that we want to kind of improve over time, that will yield like broad applicability to a bunch of communities. And so just kind of keep an eye out for like that composability. And I think maybe like one of the highest leverage things that we could do is figuring out how to get the flywheel going of Allo rewarding builders building Allo components, and getting like the faster we can get that working well and scaling it, the faster Allo will work. And so if folks have ideas there on like what area should we prioritize, what things should we focus on, what groups should we work with, all of those kinds of suggestions and whatnot, I think could be really valuable.
Yeah, I think that, we talked about like what are the friction points in capital allocation, stuff like KYC or like a grants registry, and like are there any other like object level components that come to mind for you here, Juan, that
I think what I would maybe push on is like just from a product perspective, start with like the core users and work backwards from their problems. So I would like go and interview 10 to 20 capital allocators across the ecosystems and what are their problems, what do they struggle with the most, what are they burning tons of like time and effort and money on, and what could be like way better for them. And as you like sample the space, you'll find like a bunch of commonalities. The KYC one, as an example, is just if you want to go and try like something randomly interesting with more than 100 people, you quickly enter this world of like, in order to get K funders to be able to give out funding to M recipients, you have to now incorporate a thing and do KYC and so on. And it's just such a pain and a problem. You can't go and like try out like these kind of like Allo IRL type things really easily once you kind of reach a certain scale. And so that like solving that one problem really well for everybody, where like it just drops the cost of experimentation, could be massive. So there's probably a bunch of other problems like that, and we'll get to them by interviewing the capital allocators that are doing this work already and distilling what their problems are, and then designing components against that.
Love that.
So I have to say I'm a bit surprised and disappointed that you missed the opportunity to ask me what my favorite greeting is.
Oh, no.
What is your favorite greeting, Joe?
Hello.
Hello. That reminds me, we were going to enforce...
And it could get really profound, too. So it sounds like hello, but if every time I say hello, I'm allocating my attention to you quite consciously, that's pretty cool.
Love that. All right, well, let's get some snaps for Joe and Juan. Thanks so much for joining us.
We're about to go have an allocation discussion.
Yep. So I think Joe and Juan are going to go hang out wherever they want to hang out, and if people want to talk to them, they can. But this portion of the stage will be allocated to a fishbowl discussion, which you are welcome to join. So let's do one more round of snaps for Joe and Juan.
Thanks for signing us off with the dad jokes.